Welcome, guys. I wanted to give you a rundown of last week's, the week of July 6th through the 10th of euro dollar for our EOD analysis. And for anybody that may not be familiar, EOD is basically a market game plan for each day. EOD is produced, and it's referred to EOD as end of day. We may just change the name to market game plan. But either way, is what it really is a blueprint for your trading day, and therefore it becomes your blueprint for the trading week. So I want to walk you through. The week of July 6th through the 10th, and give you an idea of how this performed and what you can do with it, and how it can ultimately put some money in your pocket. So, working out on euro, we know that starting the week in euro. We had the Greek no vote on Sunday night, and euro gapped lower. As you can see right here, this is the euro gap lower. So we closed Friday, July the 3rd at 1.1114, and we gapped lower to 1.1003. That was the first print. We actually traded down below 980. Some of you may not have been able to see that price, but the official open comes at the New Zealand Open, where a lot of the FX begins. A lot of retail platforms may not start till 6 p.m. in the evening, New York time. But this is what we're seeing. EOD is producing basically support resistance levels, biases for your trade, and specific areas that it wants you to enter. And the EOD comes out, if you look at the chart, this is about 6:30, 7 o'clock at night. It comes out at about this level. So what you're seeing is these are the support zones. So support zone number one spot 0990, second one at 0955, which if you'll remember was the prior week's low, and also a 50% fib number from the March to May rally in the euro. So fairly significant level. And then we start to see resistance levels on top. The resistance on top, one spot 1085, followed by one spot 1150. And what you'll see here, this whited out area, that's the ideal sell zone. So as we come into Sunday evening, Monday morning trade, this is where we're hoping euro trades to so that we can hammer it. We want to be a seller in euro. We want to risk our percentages up here. That's what we're looking at the night before. As it develops, what we see is support really holding well at this 990. So what do we see at 0990? Well, we see an attempt to push through it. What happens immediately when euro pushes through 0990? Does it hang out down there and continue to make new lows? No. It's instantly rejected below 990 and engulfs this candle right back to the top side. So what does that tell us about our level? It tells us our level is really good and really solid, and a level which we can play against. So for anybody that wants to trade counter trend, this is the level you should be playing off of. When do we get this level? Again, at about 6 o'clock on Sunday evening. So more than enough time. By the time at 7:30, 8 o'clock that this hits us, you already know that level's there. And what you know about it is any attempt below it was bought up rapidly. So it's okay to play long side counter trend. Where do we risk? We don't need to risk more than 20 ticks on this trade. Why? We're counter trend. But there's also a very strong support zone here. So what we notice about euro trading higher is, where does it trade? Right into our resistance level number one. When do we have this level? Again, so this trades in at 1:30 a.m. We've had this level on our screen since 6 o'clock the night before. So we know we can deal on this level. Is it our number one pick of level to deal against? No. Our number one pick is up here between 1120 and 1150. But again, I have to give what the market gives me, not what I want, because what I want is a higher price to sell. All I want to do is be a seller, but I want to be a seller from higher prices. What do we notice at our resistance level? Again, you can't really make this stuff up, because watch the reaction to it. So the first reaction takes you 3 ticks above it. So we know our resistance level is 1085. We trade all of 3 ticks higher. What kind of risk do you think we really need to use when we're selling at 1085? Not a lot, right? 10 to 15 ticks is more than fair to see if you get a reaction. What kind of reaction do you get? You get a reaction down to 43. So it's a 42-point reaction. For somebody trading intraday or short term, the question I would pose to you is, 42 ticks enough to get you break even or lock in at least a small profit? 100% it is. So whether or not you choose to take profit or run it back to break even, it's up to each individual trader. There's many different approaches. What do we get the next time? We get a slightly higher breakthrough. We go through by about 11 ticks. Again, nothing that should stop anybody out, but certainly a little higher. But what is so important about this candle? Huge absorption type candle, right? Long wicks at the top. What do we know about wicks? At the top, they're representing sell action. At the bottom, they're representing buy action. Negative close. My typical setup here is to sell after this candle closes if we trade through it, taking an entry here somewhere around 78. So that's an ideal setup. Again, what are we looking for? Reaction to be able to get ourselves break even, take risk off the table, and lock in some profit. So 1078 takes us where? 1002. So a 76 tick move in our favor by selling at that level. Again, more than enough to make some money, and how you manage the trade is not really what I'm focusing on. What I'm focusing on is giving you the levels to deal against, and that's what you're dealing against. What happens the third time you touch it? Exact same reaction, right? Long wick, long wick, long wick. What does this reaction give you? So selling 85, 78, 85, anywhere in that region, where does it take you? Takes you right back to the 990 support. What happens at 990 support? Does it hold it? Doesn't hold it, right? It trades through it. Now what is 990 becoming? 990 is becoming some resistance. So remember, we're sell side at 80, 85. You now have a 95-point winner just even here to make a decision. Maybe you take some profit. You see, what is it going to do? You let it close below. Now it's acting as what? Resistance. Do you see how this level comes into play? We had this level from Sunday night. You're now into Monday. You see how this level's coming into play? Test, can't get above it. Test, collapses. Where do we come the next time? Our 955 test. What happens? It's a decision point right in here. We don't know what's going to happen. I never know what's going to happen. I only know what I'm going to do at that level. 955, it stalls. Stalls at 955, but does it accelerate out of there? No, it doesn't. Collapses. The next level below it was 0870, which we never touched, so I don't even have it drawn on here for you guys. But now what do we get? Huge selling. Now we're rallying back to it. So now it becomes a test, right? 955 becomes a test. Hits it here, hits it here, hits it here. So multiple tests into 955 before it's finally able to clear it. What do you think is building above these two levels? A ton of stops, right? That's what you see on this candle. It's a stop run. So now what happens the next time you come back and test it? Now you're through it. Now we're looking at it more as support, right? So slight break here and immediately what? Right back up. Test here and what? Immediately right back up. Very similar look as what's going on here. You're trying to get through it. This one had no trouble. No trouble. This one immediately reverses, immediately reverses. So how do we want to look at it? Failure to extend downside, and how should you be looking? You should be looking topside. That's fine to go counter trend because now you have something to lean against. And your decision doesn't come on the first candle. Your decision comes after you see the inability for it to trade lower. Now where are we going to trade? All we're doing, and follow with me, all we're doing is trading zone to zone. Watch what the market's doing. So this is Sunday night. We have this drawn in on Sunday night. Watch how it plays. Top side, sell. Top side, sell. Top side, sell. Bottom side, can't hold, sell. Tests again, the top side, sell. Breaks here, sell. Sell. All of a sudden, the sellers here are not getting much of a reaction. If you're not getting a reaction, all you need to do is get break even and get out of the way. It's a decision point. Let the decision be made before you deal. What is this? Again, stop run. It's taking out all these shorts. And where does it trade? Right back to the breakdown area. So my point is to show you how powerful these levels are. That if you're not using them, you need to be using them. 110.85. This is now the fourth time we've touched 10.85. Do we get a reaction? Yeah, we get a 44-point reaction. Question becomes, can you make money with a 44-point reaction? I'd be willing to tell you you can make money with it. Next time up, are we getting the same reaction? No. I don't even care if you have a sell right here, you pay a quick stop. That's fine. So you've gotten rewarded, 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 rewarded. You can get long side here. Rewarded. Can you afford a 10 or 15 point stop with this and you get stopped out? Of course you can. But where does it trade into? Do you remember the Sunday night ideal sell zone? There it is. Right to it. Right to it. And what happens at that point? Collapses, right? Collapses. Where does it trade off to? Right back to this support, which again was there on Sunday night. So if you follow the theme that I'm throwing out here, is you need to be trading these levels. You need to be using EOD to your advantage. It's a market game plan. There's no way I could find a level on a Sunday night and just by dumb luck it trades to it, to it, to it, to it. So I'm going to produce these videos for you. You're going to see them more consistently, but I want you to pay attention to the power that's there and see what happens. Again, sell off here, right back to support. Now what happens when we challenge resistance? Do we reject off this resistance? Look at these. This rejects right off of it. Is this one? 30, 60, 90, 120. Now you're through it. What do you do when you're through it? Now you got to use it as support and look for the next leg higher. So what do? You get buy side. Now whether you get buy side here or wait for this pullback, I don't care. But your job is to get buy side euro. Why? Because you failed to sell off from that level. So that's how you want to treat it. And what does this one do? Ramps higher into Friday, and that's your trade. That's a phenomenal week in euro dollar. So I hope you guys were able to participate. For anybody that's not a current EOD subscriber, please check it out. We see this day after day after day. Again, this is Mark Coe bringing you the EOD analysis for the week. And wish you guys a beautiful weekend and talk to you next week.